You are welcome to another class. So, in this of today, I'm going to be teaching you the two types of change of characters that we have in true SMT, right? So, we'll be starting with the first one, which is the most basic that many people use, and I'll be showing you the advanced one. So, each of them has a unique capabilities of being used, right? It's not everywhere that you use them. So, we'll be starting off with a very simple one, which everybody uses. With this change of characters, right? The market needs to come from a higher, it needs to be reacting from a higher time frame zone. Let's say we have a market, the market has correctively been going down, and all of a sudden, right, the market reacts from a zone. All of a sudden, the market reacts from a higher time frame zone, like maybe something like this. We'll continue. So, as I was saying, right, if the market is if the market is going down, right, like this correctively, and the market reacts from a higher time frame zone, which is this zone in this case, right, and anytime the market breaks above the first valid pullback, right, our first swing high, that means our first lower high, that is where we have our change of characters. So in this case, right, this is where our change of characters is. This is where we have a change of characters. So this is our change of characters here. Now, what you need to know with this change of characters is the market needs to tap from a bigger time frame POI. That is the only condition. The market needs to be coming from a higher time frame POI. When the market is coming from a higher time frame POI, it reacts, and the first break of structure to the opposite side is our valid change of characters. The first break of the swing high. Now, in this case, how do you look for entries? How do you look for entries in this case, right? What you need to do is you need to wait for the market to create an inducement, create some sort of inducement. Then when the market rallies down and takes out the inducement, now you can look to buy and continue up. So in this case, this leg here becomes our inducement. This leg here becomes our inducement, right? You can mark it X. That is how I normally mark my inducement zones. So this leg here becomes our inducement. This is our change of characters. This is our change of characters, right? Let me increase it so that you can see well. So yeah, you can ask your question. No. When the market taps, let's say the market is going down, right? This move, right? And the market taps into a higher time frame POI. If this was your 4 hours move here, you can switch down to the 15 minutes. You look for the first change of characters here. Yes, on the 15-minute structure. The, yes, we move down to the 15 minutes now. Yes. On the 15 minutes now, you spot their change of characters, you spot their inducement, and then you can buy. So after price takes out this inducement, you can be looking maybe to buy from an extreme order block here. You can be looking maybe to buy from an extreme order block here. And yeah, your first target should be somewhere around here, right? Your first target could be somewhere around here while you continue to target the later versions. So this is the first change of characters we have in smart money concept. In the smart money concept I'm teaching you, which is known as true SMT. Now, after this one, we still have another one, right? But still, before we go to that one, I want you to master this one first. You master this one, right? Now, let's say the market takes out this inducement. This market has taken out this inducement and tapped into this zone. Now it has rallied up. We have inside here, right, on your 15 minutes, you already have your first break of structure here. This is your first break of internal structure, right? Because see here, by that point, I'm assuming that the market has not taken out the high that created this pushback yet. So this will be our first point of this our first break of structure here. You can label it a boss, right? Now, after this break of structure here, what are we still waiting for in this case? We're waiting now for the market to create a pullback here, to create some sort of a pullback, right? That first pullback that we've always been waiting for is called inducement. Create some sort of that pullback. Then once the market takes out the pullback, now we are no longer looking to buy maybe at this POI. Our POI should be somewhere on the recent leg, right? Because once the market does this break of structure now here, we now have this strong low. This strong low, this is our strong 15 minutes low in this case, right? So we are looking to buy from somewhere around here, and we target until we can do this, right? This is how people get multiple trades. Until you reach the market takes out the bigger time frame, it gives a bigger time frame break of structure. Yes, until the market gives a bigger time frame break of structure. So we can continue doing that until the market finally gives us this bigger time frame POI. So you can have maybe another zone here. You can buy from here. Then when the market goes up, gives you an internal break of structure, you can also buy from here, and you continue buy from here as well until you reach this zone here. But obviously, you need to be trailing your stop loss, right? So that if you buy from here, the market goes up, creates another break of structure. You can already move your stop loss here. You put it on break even. Keep doing that. Keep doing that. But don't over leverage, please. Don't over leverage. Over leveraging is a very bad thing. So now let's look at the other change of characters, right? That one is the more complicated one, and it's the type that many. Please turn down your volume. Turn down your volume if you are making noise. Yeah. So now the other change of character is more complicated than this one. It's when the market has not tapped into any time frame, any bigger time frame POI, and many people don't know about it. This is more majority of the change of character that people know when market taps into your POI, but they don't know that the market can reverse at any point in time without tapping into any POI. So let's go straight to the change of characters that the market has not tapped into a POI. Let me demonstrate how it should look like. Now, let's say we had a market. The market has been pushing up like this, right? The market gives you a break, an inducement, takes out the inducement, then gives you some sort of a break of structure like this. Then maybe it takes out the inducement that I gave you again, then this. Now, right, if you want to map up your inducement here, if you want to map out this structure and see which one is a valid break of structure, you start from here. This is our first valid break of structure in this case. So let me label it break of structure. Then this break of structure is only possible after the market has taken out this inducement, right? So this is our inducement level here. That's our inducement level here. And then we also have another break of structure here. This break of structure is possible after the market has taken out inducement, right? That's what I've taught you. I have many people from out of Cameroon that are showing interest. That I have many fans out of Cameroon than I have in Cameroon and Nigeria. I have guys contacting me from Uganda, Rwanda, and out of uh, many countries that I never thought I was reaching. So now the market is going up like this, right? The market is going up like this, and the market has not tapped into any higher time frame POI. What we are expecting is for the market to continue being bullish, but all of a sudden, right, the market then reverses. The market reverses. Now, when the market reverses now, right, this zone, this zone here is not our change of character. This zone still remains our inducement. This zone will still remain our inducement in this case. Now, what happens is we are still looking to buy here. This is why we tell you that no strategy is 100%. Yes, because you will never know when the market is giving you a change of characters. You'll still be planning to buy here. What can save you here using smart money, this through SMC, is your confirmation entry. Your confirmation entries. What can save you here is using confirmation entries. And obviously, many new traders will still get trapped in there, right? Many traders, I know many experienced SMC traders will get trapped in that zone because they don't follow the entry criteria I showed you. After the market gives maybe a break of structure here, right? For example, the market might come react from that zone, give us some sort of break of structure like this, but they will buy without this inducement like this. And without this inducement, there's nothing that is stopping market to just continue down. It just be an engineered liquidity that the market did over here. Now, right, when the market has taken out this inducement in this criteria of a break of structure, we are still looking to buy here. Now, what normally happens is the market will reach there and just pass, right? The market reach there, it might give a small reaction there and passes. Now, in this case, right, this is our change of characters. Here we have a change of characters here. You see that this one is more complicated than the previous one. Here we have our change of characters here. You see, right? This is our change of characters here. Why? This is the last low that created our valid break of structure. This was our strong low here. This was our strong low. The strong low has failed to do its job and continue pushing prices up. Now, now, right, with this diagram, I'm still going to show you another possibility that this change of characters may not hold. Looking at this, looking at this, right, we see that the market has taken out inducement and it has given us a change of characters completely. Now, if the market is going pushing back up, what you are looking to do is to sell. But now, without inducement, if you sell, you still become SMT. So that's why in some cases, right, it's actually rare, but it happens a lot. If you go through many pairs, you see it, the market will just continue up like this. The simple thing that people did not look is that this leg like this that created this change of character did not have any inducement. Without inducement, right, you don't need to be selling. You don't need to be selling in SMC. When trading the forex market without inducement, you don't need to trade. You allow the trade like that. Don't be afraid. You see many trades again. You see many trades again. So now, if this change of character occurs here, right, and you are looking for to sell, and you look along this zone and you see no inducement, to take out the inducement, then because that inducement is a type of liquidity, as I always tell you, it's a type of liquidity. It's trying to trick traders to get into a trade that they were not supposed to get in, so that you gather that liquidity. So now, without that inducement here, there's no need for you to be selling, and yeah, you can continue, or you can allow the price to play out, let you know, see what price wants to do. Now, when how is this change of character valid, right? When we have an inducement, when the market creates somehow an inducement, right, it is just a pullback. Once the first pullback is taken out, now you can start looking to maybe sell off a zone there here. You can start looking to sell off a zone here, right? You sell, and your first TP should be somewhere around here. So this will be our inducement. Anytime you need to enter a trade, right, first ask yourself this question: do I have inducement? If you don't have inducement, just know that that point of interest you are entering from is an SMT. It's called a smart money trap. If you want to enter a trade, there's no liquidity, right? You are the liquidity. Even the people that are watching this, that will be watching this on YouTube, right? If you want to enter a trade and there is no liquidity, you are the liquidity. So now you see from here, right? Many people that trade this strategy is called Quasimodo QM pattern. Now, looking from here, you can see a QM pattern. I've traded most of this strategy. I know how they work. I've seen them work multiple times. So looking at this, right, if you draw something here of this sort like this, you see a QM pattern form correctly. That's why sometimes when somebody sends a chart, even though he doesn't use the strategy I'm using, I see most of those things because I've traded them in the past. I've traded them. I've gone through. For you to be a good SMC trader, right, you need to know different strategies. You need to know different strategies. Not that the strategies are going to help you uh, by giving you more conferences. No, it's going to help you avoid the. It's not. I cannot really say the retail liquidity because all of us are retail traders. It's going to help you avoid the chart pattern liquidity. It's a type of liquidity that is very hard to master. It's very hard to master because the chart patterns never form exactly the same all the time. So now looking at this, right, we have our inducement here. The inducement has been taken out, and we can now look for our zone to sell from on this change of characters. This is a more complicated change of characters. Price doesn't need to tap into any zone to give you a change of characters. You are not the one telling price that no, you must go to that zone. That's not how it works. So from here now, you can get some sort of a position like this. You can get some sort of a position like this. This is the second change of characters. Price doesn't have to come from any big time frame UI. Price just needs to be going trending, then it can change characters at any point in time. So I don't think okay, let us go over to the chart again. I'm still going over to the other chart that we went to, right? On Great Britain pound CHF. Oh, let me try AUD JPY first. I don't know what I want to look for. It's not really like I really had I'm using charts that I actually used before for my analysis. Yeah, this AUD JPY like this, I'm already seeing a trade there. Just as I just opened this, I'm already seeing a very good trade. You need to have the ability to be able to scan through the market and see which pair it's worth the time, because it's not every pair that you open the market and yeah you start analyzing. Because if you do like that, there are times that you open a trade, right? You open a trade, you open a pair, you take time, you analyze it, you analyze it, and at the end of the day, you see that you have no concrete trade. You are back to you still go and look for the next pair to continue. So yeah, you should be able to do a fast scan and know if this pair is worthy. For me, personally, when I open a pair, the first thing I look at is the pair training. If a pair is trending, I don't need to tell you whether it's trending or not. Just from you glancing at it, you can already tell that if that pair is trending. That avoids the time of spending. Okay, so this is a chart on AUD JPY. I've sent this chart before, and what you can see here, right? What you can see here is I'm going to be demonstrating the first change of characters that we have had. So now you see here, the market was pushing up here. The market took out this first pullback. You look here, right? This is our first pullback here. This starting from the high of this candle. This is our first pullback here. When the market pushed below, took out this pullback and rallied up and closed above, we had a break of structure here. As simple as that. This is one of the key components of you are of your trading with SMT, you need to take care of marking this valid break of structures. Like you suffer everywhere, you'll be seeing change of characters in the market. This is the only thing that differentiates you from a normal SMT trader, right? The way you mark your break of structures. Many SMT traders, you see how somebody will map a break of structure, then mark a change of characters, then he's still looking to let's say the market was going up, the person then he maps a break of structure and in turn marks a change of character and he's still looking to buy. For example, something of this sort, right? You see somebody mark a break of structure here. You see somebody mark a break of structure here, and when the market comes below now, passes as it passes here like this, the person now marks a change of characters here, and you see the person still struggling to buy from this zone again. So that's one of the things that the majority of the SMT traders are not learning, and unfortunately, those guys on YouTube are not doing anything. Majority of them don't even know, and the ones that even know are not teaching them the right thing. It's a very unfortunate journey. Along the people on YouTube, right? Like you check the people that teach the correct thing on YouTube don't have the views. They don't have the views. They don't have the subscribers. Most of those people that teach the real thing, they are not like they're not really the content creators type of people. Those people that just come and teach this, that, and at the end of the day, you go and you are suffering with it in the market. They are not actually traders, or they'll teach you something that they don't trade. Now, looking at this, right? After this, our break of structure, we have after this break of structure, right? Where do we start looking for our point of interest? First, we need to mark out our inducement. This was our inducement in this case. This was our inducement in this case, right? Now, this inducement has been taken out. So from here, we can look at our point of interest. So from what I normally do is I start from the bottom here. I will start from the bottom, right? The last zone here, the last point of interest here is this one. If you map it out like this, you see that it has already been mitigated. If you come to the next one here, which is this one, you map it out, you see that it has already been mitigated. Now, which is the only point of interest that has not been mitigated? This one. It has an imbalance before it, right? And it also has a trend line liquidity above it. Now, this is not only our other block, right? This is our extreme order block in this case. Now, where is our other block? So if you start from here now under your inducement, you can start looking down. See that maybe you have some sort of order flow somewhere around here, the whole of this zone. If you map out the whole of this zone, right? Because the order block is not clear here, you can use the order flow. That is the whole of that zone. So you have some sort of order flow there. But now there is liquidity under the order flow. So yeah. So now after the market has pushed below correctively and tapped into our point of interest here, right? Tapped into that our bigger time frame pure point of interest. If you zoom in now to to this zone here, let me switch over. Let me see if the 45 minutes time frame will show any improvement. If you zoom in right now, you look here. First change of characters I told you about. The market taps into a point of interest, then the first zone is called our change of characters. The first break above the most recent swing high is called the change of character. This is basically just what occurred here. This is the change of characters here. Now, after the change of characters, I told you what to wait to buy, right? In this case, since the market is going up. So you wait for the market to take out inducement. This is our inducement here. This is our last pullback to the upside. So the market took out this inducement and we bought from here. You see, I was using a 1 hours demand zone here. I was using a 1 hour demand zone. This is what that's why my other block encompasses this candle. But now if I switch to this 45 minutes zone here, you see that this is how the zone look like, right? We have the difference between this candle and this candle here, which is this imbalance here. The market feels the imbalance correctly and continues up and continues immediately up. So this is how you use this change of characters to get into trades. This is how you use this change of characters. It's very easy. You need to master this. You need to master this. Oh, this change of characters will make you rich and you avoid you from entering unnecessary trades. I've been see I've taught people, right? Also traded these strategies. I've traded the normal SMC that I was talking about. I've done aggressive entries. Those aggressive entries have always been dealing with me. I will not lie to you. Those aggressive entries dealt with me. I learned from aggressive entries the hard way. I don't know. I think yeah, this is some of the that's some of the drawings I did here. The last time, right? The last time that we had a class, some of the mappings I did. I've not really checked out these pairs. I've not been trading this week. I was supposed to go on vacation, on my vacation, and yeah, I decided to take some of the funds and buy. Please turn down your volume. Turn down your volume. I decided to take some of the funds and buy my funded next accounts with them and trade. Since I already went on many this thing, many I went on many seminars this week. I had to present. I had to attend boot camps, teach others. Okay, so this is the other type of break of structure here. The sorry of change of characters, right? Now, in this case, you see that this market was pushing up here heavily. The market was seriously bullish in that case. When the market got to this point here, when the market got to this point here, the market created a break of structure. Now, this zone here, right? This break of structure here was shifted over here because this the market did not actually close price above this zone. Yes, the market did not close above this zone. So we needed to shift it to this zone where the market closed above. So the reason why this was a break of structure here is as that is was somebody did somebody exit? The reason why this was a break of structure here is just because the market took out this inducement at this level, right? You can clearly see. Now, after taking out that inducement, the market gave us a break of structure here, right? Now, where is the low of our break of structure? It's still this low. It's still this low here. So after that break of structure, the market pushed down, taking out inducement here. Actually, we have different pullbacks here, but due to due to the time frame I was using, those were not available. They were not showing there. So when the market took out this, it tapped into a point here in a smaller time frame, right, rallied up and giving us another break of structure. Now, over here, right, over here, after the market gave us this break of structure here, the market started pushing down. It took out our inducement at this level, and when it reached this POI, it reacted and bought again. But finally, it came down and gave us a break of structure because this was our strong low here. This was our strong low, right? It gave us our break of structure here, which I already explained you this type of break of structure. Sorry, this type of change of characters. I already explained to you this type of change of character. So I don't think this should be strange. The change of characters in this scenario should not be strange. So looking at this, right, after this our change of characters, what we were waiting for is our inducement. After a change of characters, I told you after the change of characters, market might just continue on if you don't have this inducement. So we actually had this inducement here. This was our inducement. The market took it out. Market rallied up, took out the inducements immediately. After taking out that inducement, the market tapped into our extreme order flow, and that is how we switch from being bullish to being bearish. This is the very thing I've been telling you, right? Once we switch from being bullish to bearish, we can start looking now for our continuous trade. The first trade we had was somewhere around here, which was this zone, right? I will not explain to you how I got an entry here, but I actually got an entry here. There's a technique that is known as single candlestick on that block that I don't think I've taught you guys yet. So now the market tapped into that zone here in a small time frame and we got an entry. Now, after that, it gave us a break of structure. After giving us a break of structure, what are we in for again? I told you, right? You can start continue moving now, following this break of structure downward as it continues developing. When a new break of structure develops, you can, yeah, you look to sell off the high of the break of structure or you sell off the zone. So after that, we had inducement. Inducement got taken and inside here. Then the market tapped into this zone. We sold again. That's how the chain continues, right? The very thing here, This was our inducement here on the 45 minutes time frame, got taken out, and we sold off this other block again until initially the market tapped into a bigger time frame POI here. And yeah, that is how the market switched from being bearish now to being bullish. So I think that's all for the class for today. If you have learned anything, please, I'll be uploading this video on YouTube. I'm expecting you to give it a thumbs up or a comment and share it, right? And yeah, you can ask your questions. If they're known, then I'll be ending the Zoom meeting. Sorry, the Google meeting.